Good morning, everyone. Welcome back to another Market Mates episode. It's great to be back with you guys on the 9th of March here. A fresh week for us in Australia, but obviously still Sunday night in the rest of the world. Craig, mate, how are you doing? How was your weekend? How's everything in your world, mate?
Whew, yeah, good, man. Happy Monday, everyone. Hello, mates. Greenie, I'm pretty good, man. Had a bit of a weekend off looking at social media as much as I could. I mean, I still dabbled, but tried to peel myself off it just because the last few weekends you're mean gone pretty ham, man. So it was like, I think I probably, for my mental health, I probably need to jump off. So yeah, it was pretty cruisy. Just I got my parents, so do you actually. We got our birthdays coming up next week. Use yours, mine's the week after. I got my folks arriving from overseas Wednesday. So just cleaning the house up, man, trying to make it look like I'm a respectable human being before they arrive. So all that sort of stuff. But no, good weekend. It rained, so just movies, watched a bit of One Piece.
So much rain, bro. So much rain.
Yeah. So no, that was nice. So no, good to be back. It's a bit of a sleepy day here today. It's a bit dark and rainy. So yeah, a little bit sleepy, I guess. But how are you?
Good, mate. Good. Busy. Lots of building. Lots of things happening behind the scenes. Yeah, lots of rain this weekend. There's a monsoon. You could call it, like in the southeast corner of Queensland. So we're all getting hammered down this way of the world. So yeah. Anyways, market continuing. I mean, oil is absolutely ripping, which we'll talk about today, guys. We'll also talk about Bitcoin. We'll look at low time frames, mid time frames, high time frames. We will have a weekly close in about 50 minutes time, which we'll talk about. We've got some articles about AI. We've got some articles about Trump and crypto. We've got articles about BRICS and what they're doing as well. So lots happening in the world, guys. So if you are new here, make sure you drop a follow. Make sure you drop a sub. And if you are listening back to this on Spotify, guys, drop a 5-star rating. We very much appreciate it. We've been doing this live for 3 years. It's fine. I'm very happy we're finally on Spotify. So shout out to people on Spotify. Craig, I actually listened to a little bit of the recordings of the Spotify just to see if like the voices were good, and it comes through good. So here I was worrying about my microphone not being like deep and
yours is really good.
So like, but it is good, right? So we need you back on your old mic, mate.
I've got a sound engineer on X helping me at the moment.
Hectic.
Yeah, shout out to, I think it's Damon. Anyway, he follows us, but that's what he does for a trade, and he was working. It's full on, bro. Like, it's not an easy fix. I was like, it's about 50 checks I've got to do, maybe 20 to not exaggerate. Anyway, it's coming. So it's annoying because I've got to like get a program to sharpen up my audit. Yours is like a 10 out of 10. Mine's like a 7. So mine sounds like it's in a basketball hall natively. And then I've got like, so annoying, dude. It's so annoying. But anyway, I'm going to get there, guys. So everyone on Spotify and Amazon listening, I apologize. I'm working on it. And, as soon as I can work out what's going on, I will rectify it. But in the meantime, I'm going to use a program that I've got now to sharpen it up for you guys. So I apologize. We're working on it. I promise you it's on the front of mind very much.
No dramas. You were a little glitchy there, so maybe it's the weather. So hopefully it's not anything else. But guys, we'll dive straight into it. Massive shout out to our partners too, BTCC. Guys, you can sign up down below. You can trade crypto all over the world. No KYC, no VPN, 40% discounted fees compared to other platforms. 10% deposit bonus plus other rewards once you're in their ecosystem. I've traded on in the past, and it's a pleasure that we can partner with them here on Market Mates. You can check that out whether you're listening on YouTube, whether you're watching on X. It's in the description or on our link tree for Market Mates. And if you're watching or listening back on Spotify, you can also check it out in the description down below, guys. As always, trading cryptocurrency is risky, so please do your own research. None of this is financial advice. We do this for educational purposes, Greg. Speaking of, we'll dive straight into it. The main hot topic I want to talk about to begin the show, which is very much in the title today, guys, is oil. Oil is the meme coin that is pumping right now across the world. I say meme coin because often it's just crazy how the world just ebbs and flows realistically in the same cyclical patterns, Craig, over time, right? It's just at a period of time, inflation's high, and a period of time we then go into war. So naturally people start to go long on oil, and then other assets that are more risky start to go down. Last week, we saw the safe haven sort of trade. Potentially, if there's more war, then people like to, usually they go to something like gold, but we actually saw the US dollar pump last week compared to the rest of risk on assets. So, I mean, it's all very cyclical. Craig, we did speak about this. Was it last week or 2 weeks ago? We spoke about how oil might be something to keep on the radar. Well, I think we were talking about it at $70 a barrel. It is now at 100, or it just hit $110 literally about half an hour ago. So that's up about $30 per barrel, $35 per barrel. That is a 50% gain in a week on US oil, Craig. That is absurd. I mean, it's a sign of the times. I mean, petrol prices, I know in the US have gone up. I see that on my timeline. Australia has gone up ridiculously as well. As I said last week, they're up about 60 cents from where it was literally the week before, which is about a 30%, just shy of a 30% increase in our petrol prices and our diesel prices. We also have limited reserves in our country. Apparently, we only have 30 days worth of reserves. My brother-in-law was telling me maybe it was down to 10 days of reserves. So the world is in an interesting position here, Craig. What are your thoughts on oil pumping and what's happening in the world of, I suppose, markets and risk on assets?
Yeah, I wish I'd taken this trade. After talking about it so long, excuse the pun, should have put a long on. Yeah, glorious pump. But regardless of whether I put on a trade, it's nice to see the market move sort of how we were speaking. We spoke about this last week, the week before. Glad I filled my tank up at $1.80, man, a week or two ago, although that's running low now. So I'm like, I looked yesterday, I think it's like $2.40 or something here. It was pretty high. I was like, whoa, that was like COVID type stuff. But yeah, oil's pumping. I haven't looked at, I think metals are doing all right as well. I need to double check that. Maybe I'm a bit behind. I didn't check this morning, so forgive me if I'm wrong. But yeah, man, cyclic's happening. Obviously Bitcoin, we'll talk about that soon. Everyone got very excited at 70K, and unfortunately we need to be the bringers of reality or doom and gloom, if you want to look at it that way, and it pulled back, hit its head. So unfortunately, Eli's gut was wrong on that move. And that's just a lesson to people. Don't trust your gut, trust TA and fundamentals. But nah, happy days. I'm waiting to buy lower. Looks like I'm going to get lower, get excited about lower prices. But no, back to oil. Disappointed I didn't take that trade, dude, on Hyperliquid. Like, I don't want to say it was pretty obvious, but yeah, it's pretty obvious.
It is, yeah.
Look, are you in that trade, Greenie? Are you?
No, I didn't take it. I didn't take it either. But it makes a lot of sense, right? Like it it becomes a finite resource, right? So, like naturally, people start to. Well, I mean, we spoke about it too 2 weeks ago. Like if people start to worry about fuel reserves, then and like of course it's a gaming system for the business, like price gouging. Like it's just crazy, bro. The world sucks, man. The world really does suck.
Yeah, a little bit.
You can trade. I'll drop Hyperliquid in the chat because you can trade this on Hyperliquid. As always, not financial advice, but check it out. Yeah. Anyways, what we historically notice is that anytime you do see a big pump, it's kind of like what you notice in like anything really. Like whenever you see the huge gold or the huge oil, the silver pump, what you do see is a long lasting correction that follows, right? So if we have a look and like the previous pump in oil in 2022, it then spent the next 1,400 days going down from that period of time. Same again when we spiked in 2008. Again, this was a global financial crisis, okay, around this sort of time. Okay, then dumped for a long period of time and has not actually ever gone back up to those prices in history. Same again, you see a big nice rally and then it corrects for a long period of time here. This is a decade of time here, right? So like it's all cyclical. It all like the same thing that happened, or it's obviously different. The world is different is what I mean, but it's important to understand that charts are similar, right? They rhyme incredibly well, and I'm not here to pick on Eli because he's a good friend of ours in the space. He's been on our show a handful of times, but yeah, like you gotta look past trading with your gut. You actually like I saw a tweet just before from him, and he said something like when you go against your plan, and I would argue that someone like him doesn't have a plan. Like maybe he does a beginner level plan, but he doesn't have a comprehensive plan where it removes bias, it removes emotions. And I would argue that 95% of people out there trying to invest, trying to trade, don't have a plan because it took me 10 years to have a plan. So I know how a plan actually comes so that you get to a point where you're not emotional, you're not trading off your gut, you're not trading on hope, you're not hoping something happens. You're strict in your invalidation. You understand why you're taking the trade. You become confident in your ability to analyze the price action, the fundamentals, the narrative, all of it. And then from there, you start to make a real plan that you can sit comfortably in. And again, I opened shorts last week and they're all printing. They're all up over 2x now as well. And so like other people trying to scalp long the little bounce here in the crypto market. And I was like, I don't know about that, bro. Like, don't fight the trend. Like the high time frame trend is still so bearish. Like it might not necessarily be very bearish in price, but it's very bearish in time. And I spoke about this last week as well, Craig, is a good trader doesn't even look at price sometimes. They understand the value of time-based analysis. And that is that next level of skill and understanding and application, because that then translates into your trading plan. And if you don't understand time, well, then I'm going to say you don't have a trading plan that is going to be consistent and profitable over time.
Yeah, no, I agree. I mean, my trading plan back in 21, me being very green, that's when I entered, for those who don't know, February 21. It was pretty easy times. My trading plan went like this: read the fundamentals, thought it was bullish, hit buy. Didn't look at the price, just hit buy. Lucky for me back then, well, unlucky for me, that taught pretty bad habits, because everything went up from Feb 21 to about May. Unfortunately, not that long, and then it dumped and then it rallied again. But back then you could kind of just buy and it went up. And then over time, you know, once you exit a bull market and things go down, you realize that you need to not only check fundamentals but the chart as well. Because if you're buying an all-time high, Solana, I did it in 21. I bought the all-time high. I said to my friend, this thing just doesn't go down. He said, dude, don't buy here. You're going to end up underwater for months. I said, no, I know what I'm doing. I bought. It went underwater for months. And then I got an exit, but I had to wait, might have been 3 to 6 months. So to save yourself that amount of time being underwater, better to find, you know, fundamentally find the coin you like or whatever it is. It doesn't have to be a coin. Then look, you know, check TA, use your fib retracement tool, find some price targets that are probably at a discount. Discounted prices is what you're after, not a premium. And then wait for that to hit. Don't let the timeline, because the timeline when prices at all-time high goes berserk, right? Everyone's like, this is amazing, and you get caught up in it. You got to tune out the timeline and go by TA. If you go by price, you'll do very well here, or better than buying on hype.
Exactly. Some pending, or not even pending, but breaking news, guys. So The Economist reports that the Iran conflict has put Asia on the brink of an energy panic. That's really interesting. And I mean, Asia would classify nearly over to Australia and New Zealand and co down here in Oceania. Some other news this morning. Breaking news: Australia's share market falls by 2.8% at the opening. Again, there's this global just worry, Craig. Like it's like, well, what is technically going to be like? What's going to be like? How long is this going to last? Can they actually keep the straight close? Like, there's just a lot happening that's really up in the air. GM to you, Brad. It's good to see you back, legend. Donald J. Trump comes out a couple of hours ago and says, no, not even a couple of hours ago, 20 minutes ago, short-term oil prices, which will drop rapidly when the destruction of Iran nuclear threat is over, is a very small price to pay for US world safety and peace. Only fools would think differently. I mean, he's breaking international law, so I don't know. I've seen a lot of hate for him. Actually, I've seen a lot of hate for him over the past couple of weeks. But yeah, I mean, it's just very interesting to see. Gasoline prices are up 12% as well this morning, Craig. And it's crazy, man. It's crazy. Heating oil prices up 14%, highest price that we've seen since June or mid 2022. And 1 month ago, oil was at $63, and now it's at $110. Apparently, the Dow Jones futures is set to open 1,000 points lower as oil prices continue to surge. That was 1 hour ago as well. So there are some quick heavy hitters. Very interesting, Craig. I mean, no surprise here to see markets just suffering. Markets suffering, energy thriving, and obviously energy becomes a finite resource. So therefore, price needs to probably accumulate or go up, right? Because it therefore becomes a premium to get that asset. Because dude. We could talk about this for ages about Australia and what we do with our natural gas. Disgusting, but it is what it is, man. Any comment on this, Craig?
The comment I'd make would be we're now getting served the reasons why the markets are going to roll over.
Yeah.
You and I have been talking about these markets rolling over for a year, and you and I said the news headlines are going to come to explain why they'll roll over. They were. We think they were going to roll over anyway. Things had to cool off, right? I'm talking stocks here, equities specifically, or everything actually is what I'm talking. And now we're getting served in the news the reasons why they're going to roll over. So we have something or someone to blame. Donald Trump's going to cop a lot of heat. I spoke about this a couple of weeks ago. I said I think he will be a bit of the fall guy for this. We're going to go into bear market, and we're going to go into big bear market. And unfortunately for his presidency, he's going to cop an absolute hiding here. But the thing is, from where I come from, I don't care about blue or red or what color the president serves. I don't really care. You've got to get a bit of past that and evolve as humans and understand that a little bit. But whichever president was sitting here, I think the markets are rolling over anyway. I don't think the president creates worldwide market rollovers. They can. I mean, look, okay, if he drops a nuclear bomb, yes, okay, that's going to be chaotic. We're all probably going to die. But apart from that, it's cyclic, and this was happening regardless. Someone like him, as we've spoken about, may just speed up the movement to the downside. We were always, as far as I'm concerned, and I've been saying this for probably 3 years, once I started looking at the real estate cycle, which is 18 years, 9 months, we're there now. So, or close. So the markets are rolling over, and now we're getting news articles to explain why, because as humans, we like to know why things happen, and we can't accept, most of us can't accept that this is just the tides of the ocean coming in and out.
Yeah, exactly. Like you can't have the craziest bull market in history from 2008 global financial crisis to where we are today in stocks and risk on assets. Bitcoin, you literally can't, like Bitcoin was zero. You got to remember that Bitcoin was zero. It's still at $70,000, or not even now, but $65,000, 66,000 today. Like you can't, like, oh, dude, price can't just go up forever. The fact that price has gone up for so long is crazy in itself across multiple asset classes. Gold and silver at all-time highs. Bitcoin just reached an all-time high in the last 6 months. S&P at all-time highs. ASX, we got it on the stream, which is the top 200 companies in Australia. All-time highs, okay? Property, all-time highs in a lot of locations. Like at some point, leverage becomes too much. Affordability becomes a serious issue. And something has to break. That's just how the world works. Otherwise, yeah, it's very interesting to see what actually happens. Like, and I mean, yeah, I actually listened to a few podcasts over the weekend about the inclusion of AI with these war, and Andrew talks about that as well. My concern is the proxies prolong the war with cyber internet disruptions. That would be very interesting. I know Iran is very much deep in the world of crypto too, so potentially there could be some interesting components there. I know they deal with China. I mean, again, this is all just word of mouth and what I was listening to at a podcast. I haven't done deep research, just to clarify. But word of mouth is that they deal with China with a lot of crypto and energy and stuff, Iran and stuff, and payments in that system, Craig. So the world, it's very interesting. And Poet also on Abstract just said they might keep the Strait open for China only. So we'll have to just wait and see what happens. But this is a bearish engulfing monthly candle on the ASX200, which we have actually not had a bearish engulfing candle for since January 2022 was the last time we had a bearish engulfing candle. For those that maybe don't know what that is, it's basically where price completely covers the previous candle of the previous month. So as you can see, if we go back in time, we have not had a full bearish candle like that since January 2022, at least on the ASX200. I mean, the S&P 500 is probably pretty similar, Craig. This looks like distribution, man. Like, I don't know about you, but if you look at this, like this looks like it could be easily distribution above the high, okay, and trade back towards where value price is, probably back towards 4,800 points. I would say is probably a fair sort of level there. You got multiple highs. You got the liquidation low here of April 2025 tariff. So I think there's a great correction at some point going to happen. Whether it takes time to play out will be yet to know, or whether we just have an aggressive dump like we did see kind of into the tariff dip last year where there's panic. I don't know, Craig. It's a very interesting time to be a trader, an investor, and just a retail participant, because we really don't know what's going to happen because we've been up only. Like, I mean, if you look at that chart, Craig, it's been up only since like October 2022. You zoom out even more, Craig. This is where it starts to get real scary. This is a monthly chart, bro. Like, it's been literally up only since 2009. Sure, you have correction periods, but it's still been higher lows, right? We had the COVID dip here. But outside COVID, like, you get a period of sometimes where you get consolidation, but this is at least due for a correction. This is at least due for a correction that we haven't seen really since 2022.
I agree. I think you've got to also ask yourself, if we've been in I'd call it the biggest bull market in the last 20 years, or probably in the last, 20 years, Does that mean we have the biggest bear market coming up?
Exactly.
Like, I'm not saying it does. I'm just asking the question. And that's a question I asked myself years ago when I saw this bull market lining up. Like, people, for the new people in the room, I know the old people in the room who listen to us for a long time and probably have heard this a few times, but when gold's at an all-time high, silver's at all-time high, copper, corn, equities, everything.
Caffeine, coffee, whatever, like fuel, like energy. Yeah.
What happens in the bear market? It's like, it just seems logical because of the upside's been so high. There's further to fall lower than there was prior. So the space between the low and the high is just so massive.
So then, using your extra like decade of experience of life compared to me,
yeah,
what assets make sense if we are going into a corrective period for like 5 years or 3 years or 2 years or a year or something? Like what knowing that what makes sense to look to probably have exposure to if you do see a corrective move, like what you would buy during the dip or what you're happy to hold into a corrective move? Is it Bitcoin? Is it metals? Is it stock?
Yeah.
Is it a property? Is it cash? Like,
yeah.
I don't know. What is it?
Well, the bad news for cryptos is we haven't, if you subscribe to the real estate cycle, they didn't exist in the prior. So I don't have a compass for how Bitcoin reacts when it pops. We know what other things do. We know, gold, silver, they can dump. We know equities do dump. Real estate pulls back. We don't know what effect that will have from top down onto crypto. I want to say crypto's a good bet because it does tend to recover well, and I think people are trading it very actively all the time. Where I'm going to put my bets, but this isn't based on past history because we don't have a history. 18 years ago on Bitcoin, it didn't exist, right? So I'm taking a bet that I think Bitcoin will still do okay, but I think definitely buying stocks could be a good buy in the next few years when they dump aggressively because they've been going up only for almost 2 decades. So the only thing is it may be quite a while for them to recover. So it's going to be, it might be a long hold. It might be longer than all the crypto bros listening right now, myself included. We're used to Bitcoin recovering or having a bear market for about a year.
Yeah.
But this could be longer. So it's really hard to answer that question with any sort of real intellect because I haven't lived through it, and Bitcoin hasn't existed through it. I'm going to pick crypto, but man, I don't come from any other place other than hope, I suppose, and being plugged in. And I suppose me being plugged in allows me to feel the markets. If I get it wrong, I can exit quite quickly. Whereas equities and that I haven't got much experience with, so I'm hesitant to make a call there. What's your thoughts there?
Yeah, it's a tough question. Like each country is different in terms of property, so I'll comment on that first. Like me buying a house now, I thought about it. I was chatting all weekend to family, and like you need to have, like, it's nice to have a shelter over your head. It's nice to no longer be paying rent where rent is arguably a mortgage these days. Is how much rent is. But it obviously gives you that flexibility to stay more liquid in cash. However, look, you need a place to live. You want to start a family. It's a very different decision. And I think somewhere like Australia and property, there might be, the correction might not be down. It might just be sideways for 3 years, 2 years. And Craig, we're lucky because we live in a very niche, I'm going to say, property location in the world. I'm going to say not even Australia, but definitely in Australia, but definitely I'm going to consider in the world. You've got the Olympics coming soon here. So for me, I actually don't mind the idea of getting into property. It's just maybe rather than buying like a house to live in, it would have been maybe better for us to consider maybe buying an investment property and having cash flow or something like that. But I don't know. You got, like, it'd be nice just to own your own house. Like that's always been a goal. And I think that's the type of people that we certainly are. So that's at least my focus is actually, okay, well, now we have an asset that's actually like a hard asset. Because I think, as you know, Craig, like I very much enjoy being liquid. I very much enjoy crypto. I very much enjoy having exposure to, I mean, I've had managed funds in the past. I've had stock exposure. I've had gold exposure. And so for me, I'm like, well, it's kind of nice to have a hardcore asset now, which is a house, right? Like,
Yeah.
and land, like no matter what, Australia still is increasing, migration, still increasing population, affordability still pretty decent. We're a rich country, so I think property from my standpoint makes a lot of sense. Whereas if you go to America, it probably is very different in certain locations, in certain states. I mean, in Europe as well. Like it's fascinating. Like if you start to go more rural, then yeah, stuff's like not really moving at all. So I think property is definitely location dependent and location specific. Crypto is an interesting one. Bitcoin, like we talk about Bitcoin as being that safe haven asset, around sort of being able to leverage it and take it anywhere in the world, right? You don't need to pick up your gold bars and declare them, right? You can just walk away with the money on your laptop, money on exchange. You can log in anywhere, or money on a cold wallet, right? So it's an interesting one. I actually don't know. I think you look, if you get a big corrective move, I think you buy the dip, but you stay patient and understand that that's probably going to be another 5 to 10 year play, and you're not going to get rich quick, kind of like what we've seen in the past few years where Bitcoin did an 8x, right? Where the stock market has gone crazy, where silver literally did what, a 5x in the past year or two. Like I think those sort of times are gone, at least for the foreseeable future. And I'm talking like a sort of 3 year period, maybe 5 year period, particularly on metals and stuff. But because like to move those markets, it's trillions of dollars. Like that's what people don't understand. And that's where I'm basing my understanding from. So I think again, I'll be just watching what price does, to be honest, and that'll give me the story and the investment decisions I'll like to use. I think the important thing here is for chat to know, and I think they already know that because this is what we talk about every show and most weeks, Craig, is that price creates narratives. Okay, price creates the news. Price gives you direction, okay, or structure changes, whether it's bullish or bearish. Literally, look at the chart on the screen here. The green zone shows you where, okay, sellers are exhausted in the past bear cycle, and the red zone shows where buyers are exhausted and people are starting to step in, and you have a distribution high, and that's a then correction back towards where the fair value of price is after going on a crazy run. So price shows you everything you need to know. I think moving from price into understanding narratives, sentiment, fundamentals is how everyone should really start to think about their plans over the next few years, Craig, because picking the right trends in the future years is probably going to be more difficult because AI is everywhere. So everyone has access to that. AI is probably the main narrative. So the question will be, well, how do you still have an edge? How do you still have probability? It's probably using skills like trading analysis and technical analysis and price-based analysis to look and go, well, hold on, this asset's about to outperform this asset, or this asset is starting to structure break to the downside or structure break to the upside. And it takes away the emotional bias of whether you're worried about the Iran war, whether you're worried about inflation, whether you're worried about the affordability crisis, whether you're worried about fuel, right? It's emotion, it's behavior, it's mathematics, it's probability, all just on a chart. So that's why I spend so much time trying to educate people about learning the lifelong skill of trading, because it's such a good lifelong skill to have. You already put yourself in the top. I was going to say top 10%, but I would say if you learn fundamental like technical analysis, like you are inside the top 1 to 5% in the world, in my opinion. And that's a pretty rare space to be. And I think that is going to be a great leverage moving into the future, where a lot of people are going to be, I mean, the affordability crisis is the main one. Your 9 to 5 is not matching the cost of living, the price to buy a house in most countries. So inevitably, where else will people look? Well, they'll look to invest, or they'll look to trade, because that's their way to hopefully try and get ahead. So yeah, for me, it's a long roundabout answer, but I would say I think diversification, right? So I think by the dip, I think you want to have someone that's come from or someone that's made wealth in a very volatile asset class, being crypto. I look to go the opposite way. I look to add more protection, still be very like I mean, I'm still day trading, so I'm doing about as risky as you could do. I'm still day trading perps, right? So that's probably at the extent of a risk curve, except for like meme coins, NFTs, airdrops, that sort of stuff, right? Or penny stocks, right? Outside those, like I start to consider, well, should I be just like allocating X amount into index funds? Should I be allocating X amount here, like into a managed fund that someone else does it for me, right? So I think it's about diversification, having a property, owning Bitcoin, owning some stocks, owning some ETFs, maybe owning a little bit. I'm not buying metals until they very much correct or show me a period. Same as the Bitcoin chart. Like I want to see reaccumulation zones on charts before I probably click buy on a lot of those sort of assets. Energy is a big one. I think energy in the years to come is probably a real big focus. Solar, wind. Okay, think about those. That's where the world's heading. Electrical, like I think that's a big focus of me, is probably having exposure to that asset class.
Yeah, no, I agree. I agree with you. I think probably like you said, diversification, and that's probably something I'll do a lot better this time. I won't be so heavy crypto. I'll be heavy crypto because it's what I know and I'm probably the most skilled at. But
yeah,
certainly metals at some point, like you said, stocks definitely at some point. But it'll all be chart dependent. So for the viewers out there, if you aren't learning TA or you haven't learned technical analysis, it's probably a good idea perhaps to do that, because it's gonna make this bear market probably a lot more digestible or less scary. Because otherwise, this bear market we've got coming is going to be quite uncomfortable. Like if you guys think, I mean, we all, there's people on X at the moment saying Bitcoin's failed and things like that. It's going to get worse, because once you've got equities crashing, you're going to get your next door neighbor saying the world's burning down. Like when all these proper crash, it's going to be pretty morbid in the media, man. It's going to be pretty bad. And you're either going to feel really bad or you're going to look at it as opportunity, but it's only going to be apparent as opportunity if you understand charts. Because if you go via news, you're going to feel bad, man, because the news is going to want to get clicks, right? They're a business. They want to sell headlines. There's no better headline than fear. Fear is like the best to get clicks. So they're going to feed you fear for the whole bear market.
It's funny.
Now, I mean, crypto, we've already felt it, right? So you're about.
That was going to be my follow-up question to you. Is crypto's front run this move compared to other assets? And often we've spoken about that pattern in history as well. Crypto often front runs moves. It pumps first, it dumps first, it consolidates first, and then other assets follow, right? What happens if we do see a larger correction more market wide? Do you think crypto is exhausted, or do you think it still has legs to go to the downside? So for me right now, we've got this chart up on the screen. I know our listeners over at Spotify won't be able to. Oh, dude, can I ban you, bro? Like seriously, dude, that language is so 2010. Seriously, wake the.
You got to call me better names than that to Russell.
Oh, dude, like come on, bro. You're insecure by saying that word, bro. Anyways, I'm not going to comment that on stream. But basically, what I'm looking at here is I still think the buy zone is going to be between sort of 45 and 55, Greg. I think that's where we're going to start forming our low, depending on a black swan event. Obviously, I don't know. I still think Q3 is my target for the bear cycle low for Bitcoin specifically. Listening to a few podcasts over the weekend, AI integration with crypto makes a lot of sense with blockchain technology. So my understanding is, well, maybe I should have exposure to the Internet of Things, which is Ethereum. Like maybe I should be buying Ethereum under $1,500. Like, so for me, I'm like, okay, well, let's just stay patient. Let's wait for that structure change, which I've circled on the chart. So for those listeners out there on Spotify who are watching us back, I've just basically got a color theme chart here showing what Bitcoin price does. It has distribution, it has consolidation patterns, it has complacency bounces, but you eventually have a period of time where you have reaccumulation zone. And that was end of 2022 through to about sort of mid 2023. I think that's not far away. We could arguably be nearly there already. And I think you're going to get a good opportunity to buy between 45 and 60K on Bitcoin. And I think that next leg is probably pending in the next couple of weeks, depending on what the rest of the world kind of does. Craig, do you think crypto drops harder if it's already in that reaccumulation zone, if the rest of the world starts to see a market collapse? Or do you think people start to go, well, hold on, Bitcoin's gone through a 60% correction already. Maybe it's probably a little bit undervalued at this sort of region. And like we saw last cycle, you have that little bit distribution below. So price was between sort of 20 and 30K for months on months on months. But we did dip to 15K just to grab that liquidity, come back up, and then we were ready to rumble. What are your thoughts? Do you think crypto actually could go lower given a potential larger market bubble collapse?
Yeah, great question. I think going by basic human behavior, it will go lower. I'd love to say people will go, oh my God, this is the greatest buy opportunity ever with everything going down. That's just not how I see traders. In my time trading, people don't think like that.
People miss tops, people miss bottoms. Like
Yeah.
they buy later or they sell later. Like that's just how it works. Like it's rare for people doing that.
Fear, to answer your question, I think fear would drop. Fortunately, really, would drive Bitcoin lower than it structurally should go.
Okay.
I think it will, and I don't know how long for. It may be quite a quick, sharp wick down, and then people like me are going to go, holy crap, there's so much fear here. This is like what I've been waiting for. And people like us were into there, and then we'll see a recovery. So yeah, I think fear will drive us lower than structurally we should go. Again, though, understanding TA, technical analysis, for those who don't know, will be a big help there, because you'll still get to understand levels below. So yeah, I think we'll go lower than we expect. And maybe my call of 36 to 38's not terrible, but it'll need a lot of fear. What's up, Katsu? It'll need a lot of fear to get to that price. So I can't say that for certain, because I don't know what the future holds.
No one does. Hey, yeah.
But I think when everything else starts tumbling, I think people are going to get very scared, man. And again, the news articles, what we're going to get fed on CNN, Fox, it's going to be horrific, dude. Like,
which is why you should not hold any altcoins or meme coins.
Yeah, I'd hope most people are out of the altcoins
or
man.
NFTs or NFTs.
Or NFTs. Yeah, dude. It's man. This is actually the moment I've been waiting for.
Okay.
As in regards to, I'm really maybe excited to see how crypto responds to its first big everything bear market. Not looking forward to it as far as the timeline goes, because it's going to be quite uncomfortable, man. People are going to get very angry.
I think there's opportunity though there, Craig. I think that's a great opportunity to build one of the biggest reputable educational based brands in a bear market and absolutely dominate the next time the bull comes around, because you stayed with it and stayed up to date and stayed relevant and stayed real.
Agreed. And I think people like you and me, not to, sort of pat ourselves in the back too much, but I think our show here is going to have more and more relevance as things get worse and worse, because hopefully we can calm people. And I think that's kind of why I enjoy doing this, because trading can be very scary, anxiety inducing. It's uncomfortable. It's hard. I mean, being a profitable trader, you're in the top probably 1% if you walk away with profit trading. It's tough. So hopefully we can help guide people in the best way possible, and also just keep everyone a little bit calmer than otherwise, because there's probably not a lot of streams out there providing technical analysis on a daily basis, bro. Like, I'm not seeing a lot of, most of it's news based.
Yeah.
And as much as news is exciting to look at, and we do it, and I think you have to do it, because the show's a little bit dry if it's all TA, right? It's a little bit too dry for a lot of people. So you've also got to have the news there just for the other people in the room that like that sort of stuff. But it is important to look at the news, because it's also good to look at what normies are looking at.
Yeah.
It's not so much for me to decide how I want to trade. In a way it is, though, because if I know what the other side's looking at and being manipulated by, I can take a contrarian view and kind of bet against the herd, because typically the herd gets it wrong. So you want to be aware of that. But yeah, dude, I think for the people listening, keep listening, because I think the next 3 to 6 months could get pretty bumpy. So yeah, stick with us. I think hopefully we calm you down.
Well, gold is absolutely dumped as of like minutes ago. I just want to touch on this too. I mean, we'll go back to that chart shortly, but bear market continues as long as USDT and USDC dominance continues to pump. Okay. We give plenty of signals on this channel around analysis based charts or considerations that you should have. So for me, it's definitely, this is one of the most important charts that we notice in crypto is anytime dominance goes up across stable coins, then naturally that puts severe pressure on assets in that class. So for me, I'm not interested in altcoins at all. And I still am cautious about Bitcoin and Ethereum and whatnot accumulation, because we've seen a huge rally here in USD dominance. It's up 2x, Craig, since basically August 2025. So That's pretty considerable when you think about the amount of liquidity that is moving into stablecoins from altcoins, meme coins, Bitcoin, right? So, I mean, Bitcoin actually dominance from that perspective hasn't moved anywhere since August. So, as you can see, it's literally people selling their altcoins, Craig, and putting it into stables. That's what that story just shows you right there. Okay. Yeah. And again, like no matter how many people tell you an altcoin season's coming, no matter how many people tell you to buy altcoins, the proof is in the pudding. BTC dominance has gone nowhere since August 2025. But you know what has gone somewhere? USDT dominance. It's up 2x. That shows you people are selling their altcoins. Gold is dumping crazy right now. It's down a huge candle. Let me just pull that up. Yeah, here we go. Huge dump down into the bottom of its range on low time frames. As you can see right now, down a 2% dump. So market is dumping into the start of the week, Craig. We have a weekly close in about 9 minutes time. We actually were live when BTC dumped to 59K, and we have seen previous dumps on Mondays. I just threw up a chart this morning on Twitter saying that the 3 out of the last 4 Mondays since we started this February range on Bitcoin have been bearish. They have continued bearish during the start of the week or later in the week where price corrected a little bit lower. So that's a 75% win rate. Are we about to see Bitcoin crash a little bit further? We did dump this morning below 66K, but we have recovered it as of the past hour or so. We're at 66-ish. We're at 66-ish right now. I am short from 73 from that liquidity sweep, but I just wanted to talk about this, Craig. Look, people love to use it's the term's escaping me right now. People love to use, what's the term where you use old price action on top of new price action? And what's the word? I'm forgetting the word. Oh, it's gone. It's gone. And anyway, someone in the chat, let me know. What's the word? What's the word when you use price action from the past? You throw it over. I can't remember what the word is right now. It's escaping me. But anyways.
An overlay or a fractal?
Fractal. That's the one. Fractal. Yeah.
That was not bad for a Monday morning.
We got there.
Sorry, guys.
So fractal, basically what price did in the past. Can you throw it on what price is doing now? And are there similarities or is it very much the same? So if we do have a look, I decided to, I put up a tweet last night, kind of engagement. Like I know, if you're trading off pure candlestick structures or pattern-based analysis, you're really not going to win over time. You need to know what liquidity is doing. You need to know other strategies. You need to be able to read market structure, price. But anyways, I had a tweet go viral. I had 2 tweets go viral overnight. I think they were very simple tweets. One of them was about Facebook being worse than CT. And it was that chart that we showed previously where someone was calling for new all-time highs in later this year. I was like, ridiculous. The second one was that we actually had a bearish engulf, not a bearish engulfing, sorry. We have like whether it's bearish or bullish is open to interpretation. One study says that it's 65% bearish, which you could argue is 35% bullish. So in theory, that just supports the notion that you really shouldn't just trade off candlestick structure or patterns like symmetrical triangles and stuff like that. You really need to do deeper strategies, deeper analysis to understand why liquidity is moving or what is actually happening on the chart. And we teach that in GTG. But I had a post go viral and some big 380K follower guys like, oh, it's 65% better. My post is just simply a what if. Like, what if this is a bottom hold on, let me pull it up. I'll give you some more context. I'll pull it up a street. Surely. Yeah, here it is. So I just basically said, surely not. It's a inverted hammer candlestick, which if you look at publications online, literally everything calls this bullish, but this one article that I've just spoke about calls it 65% of the time it does bearish. And that's actually, I have studied that before. And that is one that I refer to GTG people as that site. So again, I know what I'm doing with a simple tweet like this. Like I know what I'm doing. I'm short already from 73. So my bias is short. I'm just saying, hey, you never know. And just, just fishing on the timeline and yeah, people love it, bro. But yeah, anyways, this big Cheds guy come and commented like, yeah, come and comment. It's a bearish candle. I'm like, yeah, bro. Like I know that, bro. I'm like, you don't think I know that already? Like, anyways, it is what it is. But yeah, it's so funny, Craig. That people there's a lot of hope in out there because if this starts to go viral, then people are like, that still shows me that people don't think the bottom. They do think the bottom is in. So I think we go lower. That surely just shows confidence of that. But back to this. We currently do have that inverted hammer playing out on the weekly, which if anything, it actually looks worse than the one that we did observe in the last bear cycle, Craig, all the way back here in 2022, mate. We had that consolidation pattern. complacency bounce. We had an inverted camera, and then we went absolutely to the downside from there. We actually dumped to the bottom. We dumped another 48% over the course of May 2022 to sort of November 2022. So like kind of like a 6-month period. So I threw the fractal over here on price where we are today. And if you do have a look, it does show us that maybe we start to bottom out in Q3, like I've been saying for a while. And it does align with potentially sweeping the lows at about 49, 48K from the from the August liquidation event in 2024. Craig, what do you think that is going to happen? Is it as easy as simply taking the fractal from 2022's bear cycle, putting it on the 2026 bear cycle, and just setting a huge limit order of trillions of dollars just at 49K?
Yes, it's that easy.
Chat, we just gave you the secret to making financial freedom. Blah, blah. No, just kidding. No financial advice, but disclaimers down below. Okay, please.
I think you can use it. One of the things I see people doing on the timeline is taking fractals from a bullish period and overlaying it on a bearish period and going,
hilarious.
They're like, look what happened in 25 or something. I'm like, man, we're in a raging bull market in 24, 25. Like, fractals, you got to take it from a similar period, which you've done there. Exactly. So yes, I answered yes, being kind of silly, but I'm kind of being serious as well. I think I remember a few big names saying they don't think we're going to get a repeat. They were talking about the lower high we had when we bounced up to 98.
Yeah.
And they thought we'd actually break higher because it wouldn't be the same as last time. It actually ended up being the same as last time.
It was actually quicker. It was actually quicker than last time.
Yeah. So there were a few big names out there, a few respected traders who said, nah, it can't be that simple. And it ended up being that simple. So sometimes I think we just need to keep it simple. It looks eerily familiar. Look, even if it doesn't do that, it doesn't really matter. I guess what I'm saying why it doesn't matter is because no one knows where the bottom's going to be. But I think we're doing that. I think we go lower. I think we go lower than 49, but I'll take 49. 49's fine. Maybe we don't go lower. I do like 45 though. Taking out that little FEG there, but
don't forget, everyone always says this too. Don't forget the amount of people that will miss the bottom because they're just greed. It's the same process as the top. They didn't sell around the top. They didn't take profit when I was scaling out at 115 because they just wanted that little bit more. No, Bitcoin's going to 180K. No, it's going to 145K. It's going to 130K. Well, homie, it's up 8x from the lows, bro. Just scale some profit. If you didn't time the lows, that's on your part, okay? You're late to this bull cycle, right? And conversely, if I swing traded, it's back at break even. So I sold literally my spot last week at 73, and it's back to where I actually had my spot average at 65. So it was correct move again, Craig. So it's interesting, very interesting. Yeah, you can bookmark this cat too. I've been talking about Q3 for a while. I think it just depends how aggressive this next move is down. Okay, if it happens quick, then yeah, Q3. I would even say nearly Q2 we could bottom in terms of price. It doesn't mean that we won't see a long accumulation period, okay? And I think that's a big difference that a lot of people need to understand. This could take a year, okay, before, like the bear market low could be in the next couple of months, but it doesn't mean that the structure change back into a bullish trend is going to happen in the same period. It's arguably going to take maybe another 6 months to a year to happen. That's how price, as we said earlier in the show, takes time to reset. So, guys, if you're looking to trade crypto, check out BTCC down below. No KYC, no VPN. You can check it out. And guys, if you are new here, drop a follow. If you're listening on Spotify, drop a subscription. It's literally free on YouTube if you're watching us on YouTube. If you're following us anywhere else, guys, drop a follow as well. We very much do appreciate it. Low time frames, Craig. We have lost the mid-range here. We have a daily close in literally 7 seconds time. Can we just dump? I want a live dump. That's the daily chart.
Send it to 58, man. Right below.
Send it to 58. Okay, let's get on the daily. Okay, let's have a look. Are we dumping in real time? No, price isn't doing anything just yet.
Dump.
We're down on the 15-minute chart. Price isn't doing anything just yet. Come on. Now we might sweep. We might go and grab this liquidity up here between that gap there. So maybe price does that. So anyways, Yeah, look, we'll wait and see. Staying patient is really the story. But I mean, we've got a couple of news articles we could touch on. Craig, do you want to touch on that? I mean, we've gone for an hour just under
We
right
could
now.
do a couple real quick if there's a couple of hot ones.
Yeah, okay. So BRICS are playing a double game between de-dollarization and the West. So basically, BRICS is at this point, most analysts are not even pretending otherwise. The bloc pushes de-dollarization. So basically, they're just saying that they don't want to support the dollar anymore.
Yeah.
My consensus there is, well, that makes crypto and stablecoins so bullish. No, like BRICS being, as you can see with the flags there, is that India? Is that Russia? I can't quite tell if that's Russia, Brazil, China, South Africa, UAE. Like you've got huge Mexico. I think that could be. I can't quite tell with the flags, but like de-dollarization, Greg, that's a serious thing for and this is why I think people in the US really need to open up their analysis, open up their perspectives outside of just US dominated news and people, Craig, because there's a world out there that isn't interested in what the US is doing. And I think this will be a very interesting story if it does come to fruition in the next sort of 5-year to 10-year period.
Yeah, this has been something that's been bubbling away for a while. So yeah, it'd be interesting to see how this BRICS plays out. I believe they've had a couple of people pull out of it, or a couple of countries pull out of it. But this has been going on a while because obviously a few of these countries are not happy with the way they've been treated by the petrodollar, e.g. the US dollar. Obviously, the US puts sanctions on countries. You don't play ball with them. So if you don't play ball with them, they say, well, we're going to make things harder for you. They make, I suppose, tariffs higher, things like that. So a few countries have decided they want to pull away. I think this is just a changing of the guard. I think this will take time. I think you're seeing possibly towards the end of a real US dominance over the world.
Yeah.
Coming to fruition, and maybe the come up of China. As the next. I'm not saying that will happen. It looks like it is happening in real time. And it's happened through every civilization on the earth for all time that we know of. So it would make sense that it happens because, again, it's also cyclic. If you look at the cycles of dominant nations, you look at Rome, Greece, US more recently. And are we seeing that now? Answer your question, Baz. Do we follow the 18.6 real estate cycle? I do to a certain degree. Greenie does to a certain degree. Certainly we're aware of it. And I think it's just something to be aware of. I don't know yet. I have lived long enough, but I haven't been trading long enough to experience it myself. But certainly we are aware of it. It's something to keep in mind. Yeah,
we spoke about that earlier in the show, Baz. I think, like, as I think I'll repeat what I kind of have said for a while around the property cycle. I think certain locations are always going to trade at a premium. Like, that's just inevitable. You think, like, places like Florida, right, in America, places like London, because it's like one of the financial capitals of the world, places like Hong Kong, okay, because like a lot of people go there to work high up in corporations, right? I would argue something like the southeast corner of where we live, Craig, is also one of those premium locations, not only in Australia but globally, because people come, like, Noosa is like one of the most highly sought after locations in the world for holidays, okay, from the elite. There's houses there that are selling for 20 million like nearly every few weeks, right? So it is a pristine location of the world. And I think, yes, there could be a real estate cycle, but I think that's going to it's going to impact like areas that aren't premium. So for me, I think there's a big difference there. And sure, I think maybe I said this earlier, but like maybe we see a correction across real estate, but in those premium areas, it just like it goes sideways, or it goes down like 0.5% or 1% over a period of time, when the rest of the market maybe goes down 5, 10%, 20%. Like, so I think it's location dependent, just like anything is asset dependent, right? Like, you can make the same analogy around crypto, right? Like, Bitcoin dominance, as we said earlier in the show, has gone nowhere. ETH dominance is dumping. Solana dominance is dumping. Altcoin dominance is dumping. Stablecoin dominance is increasing. Okay, that tells you everything you need to know. It's the same probably premium nature of the asset class. Okay, let me give you another analogy. Look at the stock market. Okay, what are the stocks that are outperforming? Tech, AI based things. Okay, infrastructure for software /tech/AI. Okay. energy because it's becoming a finite resource more recently. They're outperforming. Your other stocks, millions of companies that have been created, they're not outperforming. Okay, it's the same. It's the premium nature of the asset class, and I think again you've got to take a holistic perspective when you're trading, when you're investing, and really consider it from that sort of view. And again, I'm so grateful. Like this took me years to learn, years to study, and it's so good that I can try and educate you all about that now.
Yeah, yeah. It is good. It's lucky we got you on the show, Greenie, really.
Drop a sub, guys. Drop a sub if you're on YouTube. Drop a follow if you're listening elsewhere. We very much appreciate it.
Give us a sub, you dirty dogs. But do we had a weekly close in as well? Would have been, yeah. Is that what you're looking at before?
Yeah. So we had a weekly close. Weekly close comes in at 65.95. So yeah. I mean that story before of the bearish and where is it? Here it is. So like this could in theory play out, Craig, where it is actually that reversal of this chart's a bit messy, but where you have a handle here. I mean, 65%, you would not try. I mean, 65% is not bad, but this could be a hammer, bearish and hammer that does actually see a bit of a reversal, like something up here. But I'm talking like I don't think it happens personally. I don't think it happens. I just was engaging on Twitter, but we could see a move up to here, grab some of this, and then dump from there. Like that could easily happen. I think this happens quicker though. Like this is on a weekly chart, so it's not going to be like a weekly grind up. I mean, it could. I just don't think it does. I think we see resolution of this range sooner rather than later. Is my understanding here. So
send it below. Yeah, like I said, send it below 59. Give us that next range lower, somewhere between 50 and 60, and then I can start nibbling again. That's my nibble. I want to buy, Greenie. I'm like, hurry up, just dump, man. Let's get this going.
Craig, what happens if we don't dump below 60K? Then that's the bottom.
Yeah. If it doesn't, I'll just have to buy a little bit higher. But I'm prepared to give away a little bit of that percentage. Ethereum Foundation positions blockchain as trust layer, the age of AI. Good pivot.
Well, this is what I was commenting on earlier, Craig, is EVM is where institutions go to build, to buy. My thinking is, well, if AI is going to be so integrated with, like, because AI and banks don't, like, did you listen to that Bankless episode?
No, I haven't yet.
Oh,
no,
dude.
Today I'm going to do it like clean.
At the end of it, he kind of talked about the integration of crypto and AI. And I've kind of already thought about this previously. Like, AI and bank accounts don't work. AI agents can't create their own bank account. They're not a human, right? So inevitably that means that, well, if you want to have payment infrastructure, if you want to have exposure to like financial assets and build a business that's AI dependent, well, that just screams stablecoins. It screams crypto wallets. It screams your ability to accept payments in crypto worldwide, right? So the fact that ETH is building this and focusing on this, it makes me want to buy ETH, Craig, for the first time in a long time. Even though the ETH first BTC chart looks pretty horrendous. We actually haven't brought that up on the channel for a while. But like, does this make you really consider getting into ETH again?
It does. We had a someone ask what price we'd be looking at for ETH. We can talk about that quickly if you like.
Yeah, this can be our last topic. Yeah.
Yes, I am interested in ETH based on that article. I'm very interested at about 1100. Somewhere around there if we get that low. So I'm again being patient on ETH. I'm not keen to, what's it now, just under 2,000? Yeah, 1,942. Give me about 1,100 and I'll have a nibble there. I'm kind of interested in ETH going into this next bull run. I wonder if ETH could have a bit of a send. It was quite quiet this recent bull. Now, that's not necessarily an indicator that it'll go ham the next one.
Yeah.
But the way the world's moving, perhaps ETH is going to be undervalued.
Well, that's like, and the point made in this Bankless episode from this guy who's built a full zero human company and has made 80K revenue in a month from his AI. I mean, he doesn't even own the assets. The AI has like a shit ton of ETH, a shit ton of stablecoins.
Wow.
Like the story is that crypto just makes so much sense. Like for that whole like building side of business and money payments. We spoke earlier about China and Iran using crypto for payments because you don't have that middleman. You don't have that that hold. It's crazy to me, Craig, that I have to call the bank to move $50,000 when in crypto I can move $400,000 and no one will bat an eyelid. Now, of course, there's risks involved, guys. There's risk involved, and we've all kind of been scammed, which is a shame. But I mean, yeah, like for me, it makes a lot of sense that maybe Ethereum just was built for technology that isn't here yet.
Yeah.
What have we ever thought about that? What if Ethereum is just ahead of its time as it continues to scale? And that's the big one. Like it forces me to be more bullish on mainnet and more bearish on L2s, L3s, L0s, L4s, whatever. The interesting one will be, well, if it's already establishing itself as the juggernaut L1, Solana is very much different. I think DeFi on an ETH still dominates compared to Solana. I haven't checked DeFi on Solana to see if it has still increased or not over time. EVM is just so easy, Craig, compared to a lot of other things out there. So for me, it's if it scales correctly, it's like gas isn't anywhere near as expensive as it was in 2021. Inevitably, it hasn't had as much demand as it did in 2021 with NFTs and everyone trading DeFi and all of that. But I actually, for the first time, I'm starting to come around to the fact that maybe I need to be buying as much Ethereum as I should with Bitcoin in my portfolio.
Yeah, I agree. And these are things that we couldn't really, maybe you could predict for some of the smarter people in the room, but I guess you've got to also move with the times, don't you? You and me included. And if this is the way the world's going, and it is the way the world's going, AI won't be stopped. If it has any say about it, it won't be stopped as well. Skynet. But yeah, I guess the railway lines are Ethereum's way ahead in laying those railway lines down. Yeah, man, I'm starting to have a bit of a better look at ETH now. And now ETH just needed a massive use case. I mean, for the world, not just for our little small bubble. I mean, bigger than us.
Agreed.
And maybe these are the early signs that this is actually going to be what, I mean, I remember, Vitalik and that speak, not about AI specifically, but, being the software layer or the oil layer of crypto. Maybe that's actually where maybe we're seeing that unfold now. So, NFTs and all that were great, but really, let's be honest, the rest of the world doesn't really care about that shite.
No. And honestly, I think that's the best decision for a crypto bro to do too, is you probably shouldn't care about that. Trade trends, sure, but the last point, I'll talk about the ETH chart here shortly, but last point on this ETH side is that guy, he built his agent, and its name's Felix. I never said he, but he refers to it as he, right? Yeah. He has like a technical emotional connection to it, which is pretty crazy when you think about it, because it's just an AI agent. He gave it his punk, and it actually has the PFP of the punk that he owns. So the interesting part is, well, does this actually mean that agents will have agency, and maybe these NFTs were built for our future agents that we're all going to have, Craig, rather than my PFP on Twitter? What are your thoughts? Have you noticed, before we talk about the ETH chart, have you noticed you changed your PFP? For those people that maybe don't know and don't follow Craig on X, my X is the only platform I have an NFT as my profile picture. Every other platform, YouTube, Instagram, Discord, is my own face. Have you seen a difference with engagement or anything like that since changing to your own face on X?
No, I haven't noticed a decrease. I'm hoping over time it adds a layer of trust.
I would think so, right?
And just, I never thought this would be a case, but it was just an organic shift whereby, you and I were building out a brand. Obviously that's Market Mates. And I thought, well, I felt kind of limited by siding with one collection. And I thought, well, if I'm going to build a brand, maybe I should just build my brand, me, rather than build another brand up, e.g. Pudgy Penguins, Puppets.
That's actually a fair play. That's interesting perspective.
Why build up another brand when I can just build mine up?
Oh, this puts, okay. Hey, Chad, that's a good tweet, Craig. That really, But is it because people think that their online identity is represented by an NFT? But then you would say it's better to be represented as yourself, right? To build value, build
I
trust.
think so. I think so, and I think over time I don't know, because I do like. I get the PFP and it being part of a collection, and also there's no greater engagement as well, honestly, with a NFT collection. But
Yeah.
I also didn't want to be chopping and changing.
Yeah.
So I thought, well, at least my head's never going to really change. This is who I am, right? It's going to get older, but it's going to be me. Whereas when an NFT collection falls out of favor or no longer getting hype, and it's kind of, say you align yourself with the collection, even like Clone X, right? And then they decide they're no longer supporting the collection. Then you're like, well, fuck. Like, now I've got this thing that everyone hates now, and it used to be loved a year or two ago. Bored Apes, great example. And then also the other thing that can happen, you're writing a tweet, Greenie.
No, I just got a really random email that it like looks like a scam, but kind of looks legit from Microsoft. So I was like, yeah, no, it looks so. Again, it just ignored.
Bill Gates partner with Market Mates. Let's go.
Like normally, it came to my Gmail, and normally Gmail blocks spam like that. And so I was like, hold on, is this real? And obviously, has a big link which you don't click ever. Okay. But I was just like, hold on, what is this? Like, it was like security, blah, blah, blah. So anyways, yeah, keep going, Craig. Sorry.
Yeah, so I think there's just risk with aligning with a collection where bad things can happen. You've got a risk in that the founders will stuff the collection up. And as we're seeing in NFTs, that just happens every second day.
So are you selling your Pudgy Penguin?
No, but it does remove the shackles of it. You can trade more effectively if it's not your PFP.
Well, that's, yeah. Like I said, this is why it's the only asset I still kind of hold right now is my Pudgy Penguin, because I'm emotionally attached to it as my profile picture on Twitter. But I'm coming to a point where maybe it is time. I know, like, is it time for the Greenie brand to be complete and my profile picture is the same across YouTube, Instagram, X, Discord, Twitch, everything? Like maybe it is time to do that, Craig. I think that's not a bad decision.
I think the space is also maturing as well, and yeah, I don't know. It was just one night I sat there and I was like, nah, I'm ready. It was just a moment of being ready. It wasn't like I had a massive thesis behind it. But I guess the basic thesis was I need to, if I'm going to start building up, obviously Market Mates and myself, maybe it's better just to smack myself there front and center. And I also think just from a brand perspective, a partner's perspective, I think it builds a layer of trust, and perhaps future partners might like that as well. Obviously, if people that have PFPs of a cartoon animal, more likely to scam versus someone whose face is there in that docs, right? That's
kind of why I added my face to my banner recently, because I had the same opinion that this gives it that next level of trust. Like, I'm fully doxing, and not that, you can literally go anywhere in my profile. there's videos everywhere.
Yeah, we're very heavily doxed now. We're on video an hour and a half a day.
Yeah.
Also, one last thing I want to bring up before the Ethereum chart, anyone who's using the Magic Eden wallet, I think they disable support for get everything off your Magic Eden wallets, guys. I think the 9th, if you've got assets on there, get it off. It closes tomorrow. I don't know what happened to zero. Bro, that's going to be chaos when they shut down support and people have assets on there. Like
that's ropeable behavior. I'm sorry, but that's
and the time frame they gave was so short. So 2 weeks or something. It's like,
in the middle of a bear market when 90% of the people who probably have a wallet set it up in the height of a bull cycle during the meme coin super cycle, and they're no longer here. And then they come back and like, holy shit, I've lost 5 grand, 10 grand, 50 grand. Yeah. The Magic Eden tokens down 80%. So yeah, look, I'm not bullish on that in any capacity. Actually, Craig, in about 3 weeks or less than 3 weeks time, we will have clarification around OpenSea. We will have clarification around that. So I'm very curious. Very curious.
Token OpenSea. Let's go. Give us a stimmy. We need a stimmy. The market needs a stimmy right now.
All right. Last topic, guys. We did start late, so we were happy to go a little bit over time today. That's fine. Last topic is obviously the Ethereum chart. I agree. What happens if the tech of Ethereum was just built for something that's not here yet in a 5 to 10 year, maybe 3 year period, right? Maybe that's where Ethereum's going to be really worthwhile. It's no longer inflationary or as inflationary as it was in the past. That's pretty bullish.
That is good.
It's holding its 0.25 of this range. So how I've drawn this range for maybe the listeners on Spotify is just the lows from June 2022. The bottom is 874 US. The top is obviously the previous cycle at November 2021 at ETH going to 4.8K. We actually went to the top this cycle. We wicked above it, a beautiful multi-year swing value pattern. Again, that's when I de-risked a lot of my on-chain plays because of this exact chart. And everyone called me an idiot. And here we are. We're down. What? How much are we down? Let's just again. We're down 61%. Gotta love it. But we're holding up at the 0.25 range, which is basically around that 1880 mark. I have two levels that I am interested. I don't actually think Craig's going to be able to buy Ethereum at 1100. I don't think you are. I think that we probably see it trade towards 1600. If it can't hold that, because we actually have quite a lot of support around that 15 to 1600 level. If it can't hold that, then yeah, this wick that we saw in March 25 or April, 25 during the tariff dip, at 1390 is probably my high time frame level where I'm like, stop trying to be super active, be happy with a 70% correction and just click buy and just go put it on a wallet and just forget about it for 5-10 years time. And then maybe AI has made Ethereum worth tens of thousands of dollars in the future.
50K per ETH.
Like if you maybe if you own 10 ETH and ETH goes to 25K, that's like what? Like that's 250 grand like in a few years time. Again, speculation, always do your research. Hey? Yeah, maybe Ethereum replaces Bitcoin. I just kidding. Different assets, guys. Different
purposes, but I kind of like that. I like that we need different purpose cryptos in the space. Otherwise, it's all the same junk, dude. I won't even go on. We need it. Like, it's too much. I wish there was just like 10 coins, maybe. Like, and because everything's going to just move better than it being distributed over so much shite, like tricking people. I'm certainly not bullish on altcoins. Most of them are going to zero.
Yeah.
The ones that don't go to zero, they have a use case like Ethereum. Ethereum's probably top 5, top 3 maybe. Bitcoin, hype, and Ethereum maybe, Greeny.
Yeah, I mean the important chart to always consider is, oh my god, I've written on this quite a lot. Is the Solana versus Ethereum chart. So I was talking about this in the past. Like clear trend break there, but like this was the best trade I nearly had all cycle, was just being in Solana, not in BTC or Ethereum, and it outperformed both by like 400%. The question is, if Solana can't hold this range here and go sideways against ETH, then it is a better play to hold Ethereum. But if it starts to show strength that it is going to maybe bounce upwards, well then, yeah, having exposure to maybe both Solana and Ethereum makes a lot of sense, Craig. Interesting. I mean, we'll be talking about it in real time, guys. So I think that will do it for today's show. What a great show. Thanks for everyone that's tuning in. Guys, if you want to trade crypto worldwide, check out BTCC down below in the description on all of our socials. They are our paid partner on our brand Market Mates, guys. I'll chuck in the chat again. You can trade, no KYC, no VPN. It's 10% deposit bonus. Highly recommended. I've traded on there. They've been around for 14 years. So it's not like they're going to rug you. Craig, mate, any last comments? Any last comments from today's episode?
No, I think a great show. I think we digested a lot of the market from top to bottom, including oil, metals, stocks, crypto. So hopefully people got a lot out of that and maybe got a more zoomed out picture of the world and trading versus just zoomed in on Bitcoin, which we can all get quite obsessed with. But I think what the main point we try maybe speak about is there's layers above crypto that affect crypto. So if you can appreciate how those bigger levers move, you can kind of predict how crypto will move higher up the risk curve. So great show. Thanks for pulling up, everyone. I know it's Sunday in America, so you guys are probably getting ready for work or bed or whatever. Again, get your assets off Magic Eden wallet, guys. Get it off there. I think you've only got less than 24 hours. So don't let those dirty dogs keep your precious cryptos, please, and your NFTs. Get them off there. Other than that, we'll be back tomorrow. Sup, Joe? And we'll be back tomorrow, same time, same place. And thanks for pulling up. Thanks, Greeny, as well.
Yeah, thanks, chat. See you again tomorrow, 6 p.m. Eastern Standard, 9 a.m. Australian Eastern Standard. Thanks for hanging with us, guys. The Spotify episode will be up later. If you're only just tuning in, go give us a follow. Market Mates on Spotify. Go give us a follow and rate us 5 stars. We very much appreciate you guys trying to grow on that platform now too.